Today, I want to talk about building credit and securing funding for your service-based business. Starting a business in the service industry is an exciting endeavor. You have developed a skill or a trade, and you know that the market is full of customers who need you, and you have the drive to grow. But there is one thing that often separates those who barely stay afloat from those who scale. That one key area is access to credit and funding. Whether you're running a one-man operation or looking to expand with a team, trucks, or tools, credit and capital are the lifeblood of your business's growth. This guide will break down the essential credit and funding strategies that every service-based business owner needs to know from day one. First, you need to understand the role of credit in business growth. Credit plays two critical roles in your business. First is access to capital. Most small businesses need outside funding, especially in slow seasons, during growth spurts, or to seize an opportunity. Second is credibility. Lenders, vendors, and even customers will assess your trustworthiness through your credit profile. There are two types of credit that affect your business: your personal credit and then business credit. Let's start with personal credit because that's what always comes first. When you first start a business, you are the business. Banks, credit card companies, and lenders will use your personal credit to evaluate risk. This means that your score, debt-to-income ratio, and credit history will directly impact your business's ability to get funding. There's steps to getting your personal credit right. First, get your reports. Check your credit at all three bureaus: Equifax, Experian, and TransUnion. You can use annualcreditreport.com for free reports. Then you need to dispute errors. Any inaccurate collections, charge-offs, or late payments should be challenged and removed. Next, pay on time, always. Payment history makes up 35% of your score. Set up auto pay if necessary. Then there's utilization. Keep credit card balances below 30% of the limit. Below 5% is really ideal. Avoid unnecessary hard inquiries. Only apply for credit when you truly need it. Pro tip: if your personal credit is under 650, focus here first. Clean it up. It will be the basis for most of your business funding opportunities in the next 12 to 24 months. Establish business credit, separate from personal credit, because business credit allows your company to get funding without personal guarantees. It allows you to open trade lines with suppliers. You can lease equipment or vehicles in the business name, and you improve your financial reputation and investor confidence. There are steps to building business credit. First, establish a legal business formation. Register as an LLC, an S-Corp, or corporation. Get a federal EIN number, employer identification number. Open a business bank account in your business name, and while you're at it, open a savings account in the business name. Then set up your business profile. Get a business phone number. No cell phones. You can set it up to forward to your cell phone. List your business address. Avoid P.O. boxes. Virtual offices are okay, just don't use your home address. Get listed with 411 directory assistance. Then apply for a DUNS number. Dun & Bradstreet issues your business credit profile. Apply for a free DUNS number at dnb.com. Start with Net 30. Apply to vendors that report to business credit bureaus. Uline, Granger, and Quill are examples of many of them that do. Buy supplies on Net 30 terms and pay on time. Next, graduate to store and fleet cards. You want to apply for Lowe's, Depot, Amazon, or fuel cards in your business name. Use them responsibly. Next, track your business credit. Monitor your credit with NAV, Bradstreet, and Experian Business. Once you have done all of that, you're ready to secure early stage funding. Use credit cards strategically. Start with zero interest personal or business credit cards. That's no interest for 12 to 18 months. Use them for startup expenses like tools, marketing, uniforms, etc. Make at least the minimum payment and pay the card off before the promotional period ends. Next are business loans and lines of credit. After 6 to 12 months of operation, you can start applying for business lines of credit based on revenue, term loans for larger investments or refinancing, and SBA microloans, and those are available up to $50,000 and are good for small startups. Keep in mind, lenders will look at personal credit, business revenue, and business credit profile. Then you need to understand key funding options by the stage your business is in. From 0 to 6 months, you'll probably be limited to personal credit cards and net 30 vendors. You will need good personal credit, 680 plus scores, and you will need to have your business all set up. Then from 6 to 12 months, you may be able to secure business credit cards and revenue-based loans. You will need revenue of $5,000 a month or more and consistent banking. In the 12 to 24 month range, business lines of credit and equipment leasing will be available. You will need business credit history, taxes, and a P&L. After 2+ years, you can consider SBA loans, bank loans, and corporate credit. You will need strong business and personal credit as well as full financials. A pro tip, this is a good place to insert that if you have an 800+ score, you will be pleasantly surprised at how much you can cut down on the above timelines. If you have a low credit score, get help. Someone who understands credit can give you tips on how to quickly increase your scores. In many cases, 800 scores seriously improve your business opportunities. Avoid these common mistakes. Don't commingle funds. Never mix personal and business finances. It ruins your books and disqualifies you for many loans. Don't over-rely on personal loans. Don't over-rely on personal credit. Use your personal credit to get started, but build and switch to business credit quickly. Next, don't forget to track your business credit. You can't fix what you don't measure. Regularly monitor your business credit scores. Be sure you don't skip all the foundation work. Lenders look at business legitimacy. Skipping steps like business registration, licenses, or accounts makes you look untrustworthy. Then stay away from taking bad loans, predatory loans with crazy interest rates. Always understand your APR, terms, and payment schedule. And ask if the lender files UCC. If the answer is yes, think 3 or 4 times before you apply. Next, you need to build relationships with lenders. Local banks and credit unions can be powerful allies. Set up meetings with a business banker, a local SBA representative, and a credit union that supports small businesses. Tell them your plans, show them your credit progress, and ask what they need from you to approve funding in the future. Fund smart growth. Don't just borrow to survive. Use credit and funding to hire staff, upgrade tools, buy inventory in bulk, launch local advertising, get certifications or licenses, purchase vehicles or equipment, and consider getting a coach. Don't use funding for non-essentials or personal expenses. Lenders and investors will see mismanagement fast. Next, you need to create a funding plan. A written plan will help you stay focused. Ask yourself and answer the following questions. What funding do I need in the next 3 to 6 months? What will I use it for? What type of credit or funding is best for that? What steps do I need to take to qualify? Next, position for larger capital in 18 to 24 months. The goal is to be bankable and scalable within 2 years. Here's what lenders want to see. Personal credit score of 700 plus. And again, 800 really helps. Business credit profile with trade lines. They want to see at least $100,000 of the annual revenue. They want 12 months of positive cash flow. Filed business taxes. Clear use of funds. And a strong business plan. Once you're in that position, you can start applying for SBA 7A loans of up to $5 million, equipment financing for trucks and tools, commercial real estate loans, large business credit cards with 20,000 plus limits. In conclusion, build the foundation, then scale. Building your business credit and securing funding doesn't happen overnight. But with a smart step-by-step strategy, it's entirely possible, even as a brand new service business. Start by strengthening your personal credit, legally setting up your business, and building business credit with vendors. Use smart credit tools to fund your early growth. Then shift towards more sophisticated funding strategies as your revenue and reputation grow. Your job is to treat credit as a tool, not a crutch. Use it to expand, upgrade, and scale. The better your credit profile and financials, the more funding you can access, and the faster your business will grow. You're on your way to starting a sound, good, small business.